Hi traders and welcome, Lockie here. Hope you're fantastic. I'm the lead trader at Samurai. Ladies and gents, today in the video we're going to be talking about how to trade gold very, very well. Now that being said, the rules we're going to be talking about today apply to all futures markets globally. As the strategy I originally started working on in 2007, finished the strategy in 2009, developed the indicators that you're looking at now on your screen in early 2010. Suffice to say, they're still working really, really well. We use these indicators and strategies to run the live trading room 5 days a week. Suffice to say, that's going very well. And I think there's some really, really key lessons, ladies and gents, about how to be a really good futures trader in this series of videos we're developing for you. So I do hope you like the videos. As I would say, a massive thank you for the feedback we've already received so far. That's been really good fun. So I'll keep this series of videos going for you to make sure you understand exactly how to do what we do and ultimately why. Now, guys, last night, again, was the 7th of March for the US Open. Now, the beautiful thing that you'll probably already understand about the actual gold trading series and the gold market itself, gold absolutely loves, let me just start drawing on the chart for you here. Gold absolutely loves to fail at pivots. So very, very interesting point. As the US Open was over here last night, basically got no pivots. We're mucking around the trend indicator. What does that ultimately mean? Gold is in effectively no man's land when it's running around the indicators. Now, what I do want to highlight, ladies and gents, first and foremost, as we cruise up here, this little blue circle, guys, gold is almost like a slingshot. Okay, now what do I mean by that? Every time it moves away from the trend indicator, so you see this big orange candle down here, that's an extreme seller volume candle. Every time gold moves away from that, it rebounds back to the trend indicator. Then it flicks away from the trend indicator, creates a really, really lovely space between, again, price and the trend indicator, then turns around and comes down, and then comes back down and just keeps rebounding. Now, gold has been doing this for a long time. Obviously, the gold market is very volatile at the moment because of the Trump and tariff kind of presidency. I love him or hate him, Trump's going to be really, really good for volatility for the next 3 to 4 years. So I'd suggest there's a really good opportunity to take advantage of the markets. Now, what it meant, ladies and gents, is for the gold traders last night, again, if they're a pivot-based trader, which the vast majority are, they had to wait for the market to cruise up here and clearly fail at pivots. Now, how do we know that it was failing in a pivot? First and foremost, we were presented with this little indicator here called an SBR. That stands for a static bar reversal. As there's around about 14 filters or so that go into the creation of an SBR. Suffice to say that they said the gold market is finished buying, we're getting ready to sell. Now, the confirmation that they were going to sell, can everybody see this one strength rated candle right here? Now, the beauty of the one strength rated candle, ladies and gents, if I may, is just underneath here, we've got what we refer to as a delta V2. Can everybody see just over here on the right hand side, guys? See that little red diamond there? That's an indicator that was specifically designed, guys, originally for oil and gold trading and also currency trading. So it's incredible on the Euro US cross pair. It's really, really good on the Japanese yen, guys, the Great British Pound, the Aussie dollar. This indicator has been designed specifically for those markets. So what did we end up with? We ended up with an SBR at the top, off a pivot, absolutely classic gold. What we then ended up with, guys, is this delta V2 basically telling us, that little diamond there says the institutional interest is in selling the market, not buying the market. Now, you could have entered the gold market a number of times, as this little box here is worth $100 US. So we're going to put that on that little delta V2. Guys, this box here is worth $500 US. Okay, we can see here they've got a beautiful correlation between a $200 target and a $500 target. As what I want to talk about is ultimately how you could have sat on this trade for a little while. Now, if you did want to sit on the trade for only 200, so only $200 US, effectively, as you were entering the trade, once this candle had closed back under the pivot, very, very important lesson here. Please never assume a close under a pivot. Now, as much as these things are brick walls and they're very, very powerful, guys, quite often a market will shoot down under the pivot, turn back around and go back the other way. So you're going to be very, very careful. Guys, just wait for the 5-minute candle to count down to 0 and then make a decision on its personality. Now, in this case here, we got a beautiful one strength rated candle, which means we're ready to sell the market. We get institutional orders coming into the market right there. So we wait for the candle to close underneath the pivot, and then we put our sell order on. Now, for those of you that were going for a $100 target, you only needed to wait 10 minutes from when your trade was picked up to when they glided through your target. So a $200 US target in under 10 minutes, kind of good fun. For those of you going for a $500 target, typically it means that you're going to have to be in your trade a little bit longer. Now, ultimately, your target was paid on this candle here. Your target was paid on that candle there. So you got picked up on this one, 5, 10, 15, 20, just over 25 minutes to earn $500. Once again, guys, not a bad time in trade for a $500 target. Suffice to say, guys, the pivots that we're using today, there's these big lines across the screen, the pivots across the screen, the delta here, the strength indicator, the SBR indicator, they were all originally designed for gold trading, guys, in early 2010. Clearly, it's not 2010 anymore, guys, and the market is still moving beautifully. Now, many of you that know what you're doing are going to look at this and say, well, Lockie, hang on a second. Look at this huge sell down here. Isn't this absolutely fantastic? How could I have stayed in the trade for longer? Now, I'm not getting into some advanced stuff, ladies and gents, but just give you a little hint. Over there on the top left-hand corner, can everybody see, guys, right up here on the 15-minute chart, can everybody see that coming into the trading session, so literally coming into this turn of the market, can everybody see we've got a -4? Let me put a little arrow on it for you there. You've got a -4 rated static bar reversal short on the 15-minute chart. Now, what does that mean? As the reason your workspace is designed like this is if you do pick up a really, really stunning rated reversal signal, guys, on a larger chart, you can actually hold your smaller chart trade for longer. So in this case, guys, coming into this particular signal on the 5-minute chart, with a little bit of training and expertise, you could have looked at this little signal over here on the right-hand side and said, hang on a second, I've got a -4 rated selling signal on a 15-minute chart. I'm going to hold on to my 5-minute chart for significantly longer. Guys, now what that ultimately means, for those of you with some experience, is you could have actually held on to your gold trade until the market cruised down here and failed down here at a pivot. Now, what does that ultimately mean, ladies and gents? I think it's actually quite exciting. Each of these boxes are $500. If you simply just took the first trade we spoke about there, or the second trade, we haven't spoken about that one, or the third trade, or the fourth trade, or the fifth trade, or the sixth trade, any one of those 6 trades, and basically said, I'm going to sit on this, Lockie, until we come down here and fail at the pivots, which has occurred right here while I've got these arrows. I'm going to sell down to those pivots, and because I've got a larger chart signal in my favor, I'm going to hold my 5-minute chart trade for a little bit longer. Guys, what does it mean? You've actually picked up a $1,500 trade. It's taken just under 45 minutes to pay you. Your risk on the trade when you first started was a maximum of $250, maybe $300. Whereas the moment you've moved around about 15 minutes into the trade, you could have cut your risk off to basically maybe $50. So you had $50 at risk to make around $1,500. Clearly, that's a great risk to reward ratio. And what you did is you use the indicators on the larger chart and the indicators on the smaller chart to pick up an absolutely incredible signal. So that being said, guys and girls, 5 lessons out of the US Open from last night for the gold traders. Ultimately, ladies and gents, if you want to replicate what we're doing, please make sure you've got the correct pivots on. Please make sure you've got indicators designed specifically for the gold market. And please make sure you've got an education that tells you how to use all of them. On that note, ladies and gents, I look forward to your feedback on the video. Hope you're having an absolutely wonderful weekend wherever you are in the world, guys. And I'll update you as we need to, guys, on the gold trading and how to be really, really good as a futures trader with Samurai Day Trading. Have a great weekend, ladies and gents, and I'll see you soon. Bye for now.